Jim, that's going to be really interesting to see when we start to get the earnings, where the focus of investors is, because after the close today, we get Jefferies, investment banking, not overly large. But what will be interesting, Jim, is I'm sure we're going to see extraordinarily strong returns in fixed income. We know that, right? I mean, my God, look at the capital markets activity. We talk about it all the time. And in equities. And so for the likes of Morgan Stanley or Goldman Sachs or JP Morgan, you could expect similar types of numbers. Let's see what they're going to be, but numbers are going to be quite strong. But will it be overmatched by reserve increases and, to your point, concerns overall about declining credit quality?
Yeah, I thought it was amazing that the brokerage firms, so to speak, were treated the same as the banks, because the brokerage firms are going to have such big numbers in fixed income and equity trading. But it doesn't matter. And I think what happens is that people start ascribing worries to the Fed. They start saying, well, wait a second, maybe the Fed has seen something that we haven't seen. You do have their earnings coming up. And I think what happens is people just say, you know what, the futures, they go down. The kind of the new things, I know Carl was alluding to them in my Twitter file, the new stocks that rally, that have nothing to do with the fundamentals, make you feel like that it's become speculative, at the same time that the actual bedrock fundamental stocks that we have to worry most about, the banks, might have to cut their dividends in there. I think we're speaking of Wells Fargo. So it makes it hard. Of course you can bounce back. I was listening to, look, I happen to think that when I look at and listen to the people who talk about Texas and talk about Arizona, those states benefited from what's happened in the Northeast. That's what Andrew Ross Sorkin said this morning. And so everybody's finds some reason to just say play on. And, Carl, the play on trade may be long in the tooth.
Yeah, which sort of makes you wonder, Jim. I mean, the surge that we're seeing in some of these states is at least going to be with us for the next several weeks, as the ripple effects of those new cases goes into hospitals, and hopefully not deaths, but maybe deaths. Is that going to put a cloud over the corporate commentary that we hoped we were going to get for Q2?
I think it has to. Dr. Gottlieb, who's been spot on everything he said, gave you a prediction that would coincide, and he's obviously not a stock guy, would coincide with the earnings you get from the bank. So I do think that you have to be concerned. One of the things that I'm really focused on these days is what happens with future guidance. Everyone can cancel guidance if they want to, and then I would feel better. Right now, when someone says, look, I don't have guidance, they're always punished. Eventually, if everyone doesn't have guidance, then nobody will be punished. But I do think that the coinciding of, let's say, 4 or 5 weeks, unfortunately, in an ICU did in New York lead to death. So I know hospitalizations, we talk about in Arizona. I know no one wants anyone to die. I also know that what we saw in New York was pretty placid until it wasn't. And I don't want those earnings to coincide, but they're going to. And all I want to do, I kind of pray that everybody does get better and that we've learned a lot more. We know to turn people over. We know to give people certain drugs that we didn't. We just listened to Meg. I hope we have hear from her again about remdesivir. At the same time, the idea that we're going to take out the highs, I think that that's still fanciful, except for a group of really incredible software and digitized companies, of the likes of which Goldman Sachs raised the numbers for everything. And there I'm talking about the Shopifys. So there's good news in one part, which is the digitization, which Nike emphasized on its call Thursday night. And the bad news is the banks. And I am not going to look through the banks, because they never get looked through. These are not the oils. They're not the discretionaries. They're actual companies that people worry about and maybe make people say, oh, I see. No one's paying their rent. Boston Properties said they had good numbers on rent pay. I mean, good numbers on rent pay. I mean, everyone's supposed to pay their rent. I've got tenants in places they're not paying. They're not paying. They're like, hey, well, hey.
Jim, your point is well taken in that the banks are a reflection of the real economy. And it's a conversation we've had here for some time, and a point you've made many times of late, which is that the overall stock market doesn't necessarily seem to be reflective of the real economy. But to some extent, the banks, or a large extent, are. And it's, if there are rollbacks and reopenings, that is going to take a toll. We still have an extraordinarily high unemployment rate, which we're hoping will come down, but it will come down at a less rapid rate if, in fact, these rollbacks continue and the virus continues to move at a fairly rapid rate, unfortunately, in certain areas.